So that concludes the swing point video. Let's head on over to the next topic, which is the double purge, an eye-opener to liquidity. Now we're gonna be going over a few points over here for the double purge. Those market makers will only move price with low resistance after they knock out both sides of the markets. Now we want to use this in the direction of the higher time frame institutional order flow and higher time frame PD arrays. And this pattern can be used for both reversal and continuations. Most important part over here is SMT. We really want to spot that SMT to make it high probability. Because why? This is where the very high probability order blocks form. And if we know what a high probability order block is, we also know where to put our stop loss above or below. So in a bearish scenario, sell stops will be taken out first, and then the buy stops will be taken. And what are we going to be waiting for? Once those buy stops are taken, we want to see SMT, because that is where that high probability order block and or fair value gap forms. The high which took the buy stops is very highly likely to be a protected high, and then again SMT is key here. Now in a bullish scenario, we want to see those buy stops getting taken out first, then the sell stops will be taken, and then again we want to be waiting for that SMT to form, right? Because that high probability order block or fair value gap forms once that SMT is formed. The low which took the sell stops is very highly likely to be a protected low, and again SMT is key over here. So over here we got a crude schematic of price action, right? We've got a line chart over here for a bearish scenario. We've got a line chart over here for a bullish scenario. We've got our premium key PD array outlined and our discount key PD array. So we have to approach this mechanically, right? We want to see this happen first, then that, etc. So what are we going to be waiting first? We want to see those sell stops purged, or in a bullish scenario we want to see those buy stops purged first. Now why do we want those sell stops or buy stops purged first? Think about the order pairing video, right? Revert back to the previous videos. We want to see those sell stops accumulated below an old low and those buy stops accumulated above an old high. So now that we have accumulated the sell stops, we want to think about that order pairing, right? We want to pair up the sell stops with the buy stops, or the buy stops with the sell stops. So how does that look like? We're gonna purge the buy stop second over here, right? We're gonna take out that high, and now we're accumulating buy stops over here, and the key is it has to be in a premium key level over here, that PD array. And then in a bullish scenario we want to see that discount PD array, right? Now when both sell stops and buy stops have been purged, aka the double purge, right, then the market makers will move the market in the real direction it wants to go with low resistance liquidity run. So now in a bearish scenario, first the sell stops, right, then the buy stops purged, which is a double purge, and then the LRLR happens to this low. And for the bullish scenario, same occasion, we're gonna purge the buy stops first, accumulating the buy stop, pairing them up, right, order pairing with the sell stops, and then the real move to the high happens, which is a low resistance liquidity run. Now what is a key signature? We want to see SMT happen on that higher time frame PD array. So this is key, double purge and SMT for that low resistance liquidity run. Now let's go over a couple of examples so we can spot it on the charts. What are we going to look for, right? As always, mark out your premium and discount of the range, and specifically we're going to be focusing on this piece of price action over here. What happened in this piece of price action? So if I go to the next slide, we see buy stops and sell stops resting above the high of the range, right, the buy stops, and the sell stops resting below the range low. So what do we want to see first? We want to see those buy stops getting taken out, right, the first part of the double purge. Then we want to pair up the buy stops with the sell stops. So sell stops purged second down here, accumulating those sell stops. Now this low is highly likely to be a protected low because we already paired up the buy stops with the sell stops, right, and then continuation up is more probable. What is key? We're gonna be waiting for the double purge, right, and then we know the LR, it will happen into this high. Buy stops first, then sell stops, then we have a protected low formed, and then we want to have the real move, which is a bullish move into this high. Now we're going to be focusing on this little fractal over here, where a large low resistance liquidity run occurs. And think about this high is a target, right, in this whole range. And now we're going to zoom in on this piece of price action, which is a fractal range. So zooming in over here, right, we want to see those buy stops and sell stops taken out, right, the double purge. Now why do we want to have that? We want to accumulate those buy stops above that old high and then pair them up with the sell stops below it, right? Now after we pair it up, we should have a protected low, just like in the example on the previous range, right? We have this low here, which should be a protected low, and now once we know this is a protected low, we should have a low resistance liquidity run to the highs, which is on this high which purged this range candle. So if we zoom in a little bit more, right, we have that piece of price action over here, but only we're on a 4-hour chart, right? The previous slide was on a daily chart. Now same thing happens over here, right? We've got this range, and this is a fractal, right? We are on 4-hour right now. This was the daily high and the daily low of the range. We can see the buy stops being purged first, then the sell stops, and then we have a protected low, right? And what was key, again, mechanical approach, right? We want to see 1, 2, then SMT happen for it, making it a higher probability protected low, and then the low resistance liquidity run should happen into the high. So zooming in a little bit more, now that we know that we have SMT, we have a protected low, we know the LRLR is gonna move into this high. So where does the opportunity lie? We always want to be a buyer in discount, right? And we can actually see a 4-hour discount fair value gap here, which is a perfect area to take a long from. So now let's zoom out a little bit so we can clearly see the sell side of the curve and the buy side of the curve. And think about the previous video, right? MMXMs are swing points. We can actually see that we have an original consolidation here. So sell side of the curve, smart money reversal. What is key again? SMT, right? We want to see that SMT on the smart money reversal. Then price moves up again, and then we are working with this fractal range where we want to take a buy, right? So buy stops were purged first, then sell stops, protected low. Again, SMT is key. So where do you want to take a trade from, right? The 4-hour fair value gap is the high probability area where you want to be taking a trade from. Now over here we can also see after we purge the buy stops, right, then the sell stops, protected low, you can use that order block, which is a very high probability order block because of that SMT and because it's the double purge order block. So now from here on out you could also take a buy from the order block into these highs and then take profit above it, right? And just outlining again over here that SMT is key on these lows. So let's say you did not get in on this order block. Is there still an opportunity? Yes, right, because we have a discount fair value gap coupled up with that high probability order block. So we know, because this is a highly likely to be a protected low, that you can put your stop loss below that order block, right, and enter from that discount fair value gap. Right, so let's head in on the next example over here. You might already spot what kind of model this is, but let's draw out the premium and discount range first, right? This is the dealing range we're working with. We can see price closes below inside this candle, so it's likely to run this low, right? And then price dips back into discount. And now we can see the next candle takes out previous daily low. So let's zoom in a little bit more on the 1-hour chart. We all know this is the X model, right? The Twitter model from the MMXM trader. I'm gonna dive in a little bit more how the double purge works on this specific trade, right? So previous daily low gets run first, so we take external range liquidity here, right? But what actually happens if we zoom in on the 15-minute time frame? We've got the previous daily low rate, right? But what happens before we rate that previous daily low? First of all, we purge those buy stops, right? So we have a double purge scenario over here. So we're accumulating the buy stops above that old high, then running down lower, and then doing this the second purge, which is order pairing, right? We're pairing up the buy stops with the sell stops over here, run previous daily low. And what do we know about the double purge? We are creating a double purge order block, which is a very high probability order block where you can take a trade from. So we know that most likely this is a protected low, right? because we had the double purge and then we formed that order block. Right, so let's head in on the next example. We've got a GBP USD daily chart over here, and first of all we're gonna spot the SMT here, right? That is key. We've got this dealing range where price broke back into discount and then moved away from here. So we're gonna be focusing on this low resistance liquidity run, this whole move up here. So what do we notice, right? We've got SMT, we've got a higher time frame key PD array, which is this order block, right? So we're having a key level, and what are we going to be focusing on? We're going to be focusing on that double purge, right? So now we zoom in a little bit more, right? And key thing is we're in a key level, the daily order block, right? So let's take a look at this piece of price action and see if you can spot a double purge over here. Right, we start off with this range high and this range low, right? We could see buy stops are being taken out first over here, and notice how that high gets broken through with strength, right? So that indicates bullish institutional order flow. Now we want to pair up those buy stops with sell stops, right? So we're gonna outline our range low down here, and we're gonna purge that second. Now after we purge the second one, right, the sell stops, we're gonna focus in on this piece of price action over here, because we want to catch that low resistance liquidity run, right? So now we know there should be a low resistance liquidity run into the highs after we purged the sell stops. So we're going to be focusing on what happens over here. So same thing happens over here, right? It's all fractal. So we can see those buy stops purged over here. That is the first purge, right? Buy stops accumulated above an old high. Then we want to see those sell stops purged, right, on the range low, order pairing. Eventually this is the range low we want to be focusing on. So now what do we know? Once we form that SMT with the double purge, right, it is highly likely to be a protected low, and there will be a high probability order block formed. So over here we've got that order block, right? We close above it, so we have a change in the state of delivery. We can see the next candle taps back into that high probability order block, right? The wick is also part of the order block as well as the body, and you can see price is very willingly trading away from that high probability order block. Alright, let's go over a bearish example. Over here we've got a GBP USD daily chart. Again, as always, premium and discount, right? We want to know where are we in the range. We are high up in premium over here. Can see SMT had been formed on these highs, and now we know higher time frame will be bearish once we close below this candle, right? A change in the state of delivery. So let's zoom in on the 1 hour chart over here and see if you can spot the double purge. Again, discount and premium of the range, right? We can see those sell stops are being taken out here, so we're accumulating sell stops. Now where do we want to pair them up with? With the buy stops, right? So where is that range high? Over here. So we purged those buy stops, and now we know, because it's the double purge, right, we want to see those sell stops with the buy stops, and then the LRR move, or the low resistance liquidity run, should happen into the lows. Now what is key? Again, we want to see that SMT form on those highs. So after that SMT is formed, we're going to be focusing on this fractal, right, this large move down, and you can see this is low resistance liquidity because we move swiftly down without chopping too much, right? We can see that over here is chopping a little bit, and then this whole move is with low resistance. So over here we've got a schematic of a few candles, right? How does that double purge actually look like if we view it like this? We've got those buy stops over here that gets purged by the second candle. Second candle closes inside the range as well. Think about the swing point video, right? Then the third candle goes for the range low. This is where the second purge happens. So we're accumulating the buy stops, pair them up with the sell stops, and then the real move should happen, which is a low resistance liquidity run into these highs. So same case over here. This is a bearish scenario, right? We want to see those sell stops purge first. You can see this candle closes inside of the range of this candle, goes for the buy stops above it, so we're pairing up again, order pairing, right, sell stops with the buy stops, and then the real low resistance liquidity run should happen into this low over here. Let's go over another example. Over here we got a GBP CAD daily chart, right, and this is all encompassing what is happening over here. We're going to explain why this candle was a big bullish candle, right, a low resistance liquidity run over here. First of all, premium and discount, right? As always, you want to have a higher time frame key level, and then you're going to be waiting for that double purge to occur, right? We want to see the buy stops getting taken out first. You can see that over here. Then we take out the sell stops, and then we can see the fourth candle actually, right? We have a swing point over here, which happens in a key level. The fourth candle runs up higher. Why is the fourth candle running up that high? Because the third candle did not take out the range high yet, right? So the fourth, you either focus on the third or the fourth candle for that range expansion. Right, so we've got another example over here. We got a Euro USD chart. Again, the double purge, right? We've got those sell side taken out first and then the buy side, and then there will be a low resistance liquidity run. And actually, this weekly candle had CPI, so we're gonna see how that looks like in the next example. So we've got that same Euro USD, only this is a daily chart, right? So we're gonna be focusing on this piece of price action. As always, start off with mapping out your premium and discount levels. Where are you in the range, right? What is that key PDRA level? So we've got a higher time frame key level over here, right? We've got the daily order block, and we can see price trades back into that order block, and then there is a low resistance liquidity run lower. But why was there a low resistance liquidity run lower? This was the CPI candle, right? This is a massive candle to the downside, but what happened prior, right? We got a sell stop rate first over here, right? So we're taking this candle's range. You can see the sell stops are being purged first of all, so we're accumulating those sell stops. Then the buy stops are being taken out, and then the real move happens, right? Because we have a sell stop rate first, then we have a buy stop rate, and then the real move happens, the low resistance liquidity run down into this low, and this was on CPI as well. So over here we've got an execution as well that the MMXM trader took, and we can see that CPI candle delivering massively. So we're gonna go over a few more CPI examples, because the double purge happens before those CPI releases, and we're gonna go over how that looks like. So first of all, we have a CAT CPI, right? This massive candle. We've got a double purge happening before it, right? So we take out the buy stops first, then we take out the sell stops, so we're order pairing, and then the low resistance liquidity run should happen into the highs. Same thing on the next CPI. This is a pound CPI, so we had CAT CPI first, massive candle, then back into the range here. Notice we're on that order block here as well. GBP CPI candle over here, massive expansion again. But what happened first, right? We took out this buy stops first over here on this candle's range, then the sell stops got rated, so now we know we have a double purge on this range, and then there should be a low resistance liquidity run happening to the buy side of the curve. We've got another example of where the MMXM trader executed this trade, right? Double purge, execution, take profit, another purge on the low, continuation purge, and then another expansion over here. Alright, so this time we've got a Nasdaq chart over here. So we can see the key thing over here, right? We want to see SMT in that higher time frame key level, which is a daily fair value gap. So we have a double purge over here, right? We take out the sell stops first, then we take out the buy stops inside that daily fair value gap with SMT, and then the low resistance liquidity run should happen to the downside, right? Then another one over here, we take out the sell stops first, and notice how we close inside the range, right? From the previous video, the swing video, the candle closes inside, so the third candle is most likely to complete the range of that range candle. Buy stops are taken out second, so we have the double purge, right? And then a low resistance liquidity run should happen to the downside, and we can see that come to fruition over here. So over here we've got that execution, right? Double purge into the higher time frame key level with that SMT, and then execution should be to the downside, and then take profit below that range low over here. So let's zoom in how that looks like on ES, right? This is a 15-minute chart, so we can clearly see we have a market maker sell model going on, right? We have that original consolidation down here into buy side of the curve. Now that high probable smart money reversal happens in the key level with SMT, right? Price starts to decline, and we can see price forms a range over here. So what does happen over here? First of all, purging the sell stops, right? It's the same steps over and over again. First the sell stops, then price taps into the buy stops, and again notice how the energetic close below the lows are, right? And we can see a purge on the high, and while the body is closing below, right? So we can see it. This is more of a rejection, and this is an indication of bearish order flow. So we got a high probability order block formed, right? Because we had that double purge, and we can see that high impact news comes back into the order block, and then a massive drop occurs down into the sell side of the curve and completing that market maker sell model.